go right to an expert on healthcare. We've got John Sullivan. He covers the healthcare industry for Leerink Swan Co. John Sullivan, welcome to the program.
Hey, Pimm, good afternoon.
Good to have you with us, John. All right, so what happens now? It passed the Senate Finance Committee. What is the next procedural step in Washington?
Well, there's a couple of things that now have to happen. Two bills have now been advanced out of committee in the Senate. They need to turn into a single bill. That's the job of Harry Reid, President of the Senate. And in the House Rules Committee has to take three bills and turn them into a single bill. So that's the work of the next couple of weeks.
And does this passage of the bill, does this remove any of the uncertainty that a lot of healthcare investors have had, let's say regarding managed care, for example?
You know what? This is certainly a step in the right direction. We're a long way from the end zone yet. We do think at Leerink Swan you're going to see healthcare reform. You're going to see a bill passed by the end of the year. But there's still a lot that has to happen between now and the end of the year. We like HMO stocks. We think that as healthcare reform gets resolved, HMO stocks can benefit.
All right. Well, in fact, I was going to ask you to talk about managed care and HMO stocks. Let's talk a little bit about Cigna, because if there still is an overhang for many investors, you've got a little bit of an inside look as to what's going on in the industry. Could the stocks all move ahead when we finally get resolution?
Sure. You know, we think managed care stocks have come down an awful lot relative to even the rest of healthcare. So managed care stocks a couple of years ago were trading at valuations above the entire healthcare sector. They now trade at half of the healthcare sector's valuation, more or less. We're most interested in those stocks that don't have a lot of exposure to the individual or small group health plan market, and Cigna actually fits that bill very well. That's the first one we'd recommend in healthcare, in managed care.
All right, so you got that whole issue with the small groups and then cash flow, right? Is cash flow going to be key when selecting HMOs as an investment?
You know what? It's more important that we get this healthcare reform issue resolved, but a nice benefit of Cigna is it's got an awful lot of cash flow. That'll give them that'll give Cigna more flexibility as it grows its business going forward.
Tell me about what's going on in the world of information technology in healthcare. That has been a particular effort on the part of the president. What about a company, let's say, like Cerner? Is that something that investors need to pay attention to?
You know what? For all the talk about healthcare reform, where people differ, one thing everybody agrees on is that better information in the hand of the doctors and in the hands of the hospital will mean better care and more cost-effective care in the long run. Cerner's a great investment opportunity for investors that want to benefit as more healthcare information technology gets installed specifically at the hospital level. So that's our favorite name in healthcare information technology.
John, can you give us any idea of how far the market has been penetrated? I mean, is there still a lot of room to grow?
We think there is an awful lot of room to grow, specifically at the hospital level in healthcare information technology. We think there's several years' worth of penetration left. And for all of the talk about not enough money to do what we want to do in healthcare, don't forget, healthcare information technology is an area that was treated very favorably in the stimulus package that was passed in the first quarter of this year. So there is money coming from the government to hospitals and doctors' practices specifically for the installation of healthcare information technology. And at the hospital level, that should benefit Cerner.
Let me just turn your attention now, if I can, John, to big pharma, rather. We're going to talk biotech in a moment, but big pharma, because that seems to be an area of investing where a lot of people want more information. Tell me about the merger right now that's going on, the Pfizer-Merck combination. Is that a stock that you want to be owning, and do you think they're going to be able to wring, as they say, synergies, but we just mean cost cuts? Are they going to be able to bring costs down?
Right, Pfizer and Wyeth, that deal is getting ready to close in the beginning of October. I'm sorry, in the beginning of November or so. And we think at that point, Pfizer is very much in control of its destiny for the next several quarters. There are clearly significant cost benefits that the management of Pfizer can bring to bear in the wake of the merger. We think drug stocks are generally under-owned right now. Investors have stayed away because of the uncertainties regarding the merger. Once these mergers close, we think that there are larger institutional investors who can come back to these pharma stocks, and in the case of Pfizer, find something that's selling at a reasonable valuation and with an opportunity to really grow its earnings through cutting costs.